Let's get started. Um, Donnelly, welcome very much. Welcome to the Beekly. I'm happy to have you. We're going to assume like a strong level of familiarity with offsets for this conversation, so we're going to skip a lot of the basics, and hopefully everyone here understands that. But I want you to start by painting Calyx's role in the offset market as a verifier and I'm sorry, as a ratings agency, and specifically talk about some of your decisions to avoid categories such as being a verifier or a broker. So paint the like market that happened behind buying a carbon offset.
Yeah, first of all, thanks so much for inviting me to the Beehive. I'm
The
actually
Beekly, the
curious.
Beekly.
The Beekly.
This is Beehive's weekly webinar, the Beekly. It's
Oh,
a TM trademark pending.
okay. I'm curious about the name, how the Beehive merves into the Beekly. Anyways, thanks for inviting me. Thanks for asking about Calyx Global. We are a carbon credit ratings agency. It is a relatively new actor, I would say, in the carbon market ecosystem. So sometimes I feel people are still getting used to us being part of that ecosystem. But I founded the company alongside with Duncan Van Bergen 4 years ago because we felt that the market can do more. So it was really exciting to see companies step up and engage in the market and want to do something positive on climate. But having watched this market for a couple of decades, I've been around for a long time, I guess. I just knew capital was not being allocated to their highest and best use, right? That many of the offsets were not what they claimed. And that if we had finance coming to this market, it could do more. So our mission is to drive the market to higher impact. And our theory of change is that by providing independent science-based information to buyers and investors, we can help them make good choices that would be
Yeah.
positive for the planet.
I want to start actually my first question you led into very well. Second question. Um, might sound dumb, but I think it's important to rehash. Tell me why offsets are good for the planet, and tell me why offsets are good for corporations. And sometimes those two things are not the same. Often those two things are not the same. But why offsets at their best are they important environmentally? And then why are they important commercially for companies?
Now I know why you're called the Beehive. I just feel like you're putting your finger on the things that, that are in fact like almost a wasp's nest.
This
These
this is this
difficult
is testing.
questions.
Yeah, yeah.
Yeah, yeah,
Well, I was thinking about this. So I
yeah.
to interrupt you before you even get going there. Like I used to work in carbon accounting. I think every carbon accounting software company is really just a laundromat trying to sell you offsets. That's where like a lot of the money comes from. And so w- sold a lot of carbon credits, tried to do a really good job both being transparent and looking for integrity, did a lot of research into this as much as I could. There's absolutely places where offsets fail environmentally and cause more harm than good, sometimes vindictively and intentionally, sometimes accidentally. The first one cannot be forgiven. The second one can be once or twice, but now I think we're past that point. And I'm still debating, quite honestly, when and if different kinds of carbon offsets are good for corporations to do. So, like, I think it's a really important debate to rehash. And I was thinking about questions to ask you. Um, I've had this conversation before with some people, and they're like, oh, if you're still asking questions about this stuff, like, you don't get it. I actually don't think that's true. I think if you ask questions to a accountant about why gap accounting is important, they're going to kind of objectively answer you why gap accounting is important. And that makes it more, it builds up the integrity that you can have those conversations. So that's why I want to continue to push on why this is important, because if we can continue to make those arguments that it is, and we can do so dispassionately and thoughtfully, I think better companies will do better things with it. So after that rant and preamble from the wasp nests, I'll turn it back to you.
Um, I think it's actually a really great question. Like, I think that, and it's nuanced, right? And I think you're right. You have people on the divide. You have some folks that say, oh, it's all greenwashing. It's bad for the planet. It shouldn't happen. And those are the folks who look across offsets and they find some that are not what they claim, right? For sure. offsets are imperfect. And then you have on the other side the whole carbon market ecosystem, people who have built businesses on creating carbon offsets, and they're like, carbon offsets are the greatest thing, right? They allow companies
Yeah,
to
they solve
reduce,
everything.
yes, yeah, they can solve climate change. They allow companies to reduce their emissions at a lower cost. And the truth is somewhere in the middle, right? I think the truth is that carbon offsets are not perfect, but the question is, when companies engage, do we get more mitigation or less? Not that do we get a perfect claim. The question is the planet better off? Um, I haven't seen anyone answer that question. I think that's the question to answer.
It's
Not
a
are
good
they
question.
perfect or not are they the answer to climate change, right? The question is, are we getting more mitigation or less? And I think there's two sides that we have to look at in order to answer that question. One is the quality of the credits, like how good are they? And
Hmm.
then the second question, which no one looks at as much, is this company doing more than it would have done otherwise, right? Or are they using it as a get out of jail free card? And I think on both sides, because you have imperfect offsets, some are better than others. And that's what we do, help people find the better ones. But you also have claims on this side. And I think there's a lot of evidence suggests that companies that are engaging in transacting in carbon credits are the ones that are doing more, right? They're the ones that are both reducing their own emissions, seeing that there's hard to abate, very costly, difficult, out of their control emissions, and wanting then to use offsets to compensate for those. And the extent that they're doing that and not trying to not reduce their emissions and buy like the $1 cheap, not very good offset. The more that companies are making that good claim, doing their own hard work internally, I think that the market is doing something on balance that's positive for the planet. So I think I land on, if I had to guess, I haven't done the study myself. I would love for someone to do this study. My guess is that on balance, we are getting something positive, but I also believe we can do even better. And
I, I like that reframing. Calyx, I think launched formally in 2021. Is that right?
yeah,
But you've been doing this work or work related to climate change for about 20 years. Short history of carbon offsets, those around here, but in the early 90s, I think like a large forestry company somewhere in the Northeast said, "Hey, Rhode Island or Massachusetts or something's really mad at us for cutting down their forests. Maybe we could kind of plant some trees somewhere else, and that'll be a balance that they'll be happy with." And so the carbon offset was invented through that. And it was pretty benevolent. They meant it as a good thing. It wasn't meant to be trickery, but a lot of politicians got really excited about this. A lot of financiers got really excited about this, and the market boomed. I think the credit trading scheme was built in Europe or launched in Europe in like 2002 or four or something like that. And that era went up and down. California has basically a carbon credit trading stream. There's been mixed results, but I think actually fairly positive. And there's been a lot of proof that again, there's imperfections, but on average, things like that have led to reduced emissions because you don't want to pay fines for it. The last 5 years have been insane. And so since Calyx came around, coincidentally or not, it has been a wild ride in offsets where in 2021, probably, it was great news. We solved climate change offsets. We did it. And then I think this would have been, let's see, January 2023, maybe I'm off by a year. The Guardian article came out claiming 90% of rainforest related offsets are garbage, and Delta Airlines had a lawsuit for claiming carbon neutrality, and EasyJet had a lawsuit for claiming carbon neutrality, and John Oliver did a story about how terrible offsets are, and then everyone hated offsets. And then in the last maybe year or two, direct air capture and carbon sequestration and frontier climate came to save the world. And great news, it's not about tree planting. Offsets are more credible. It's about carbon removal, and we're going to sell offsets that way. And then this year, IRA funding got pulled out, and there's a lot of these half-built direct air capture plants in Louisiana that are not going to be built. So your 4 or 5 years in offsets have been a tumultuous 4 or 5 years. And I'm curious if you can talk about, before you talk about it as a ratings agency, just talk about it as an observer. of offsets, what those 4 years have been like, and where you think we are now. Where's the dust settling over the next couple of years?
Yeah, I love your short history of the carbon markets in 3 minutes. Um, it's a great summary of the the path that we've seen. This is not the first boom and bust, I will say, having watched this for a couple of decades. We saw that about 15 years ago as well. There was the similar 14, 13, 14. So it's not the first time. These markets, especially I would say the voluntary markets, because the voluntary markets are not regulated. So when you have a compliance regulatory system, you can smooth out some of that boom and bust. Not entirely, but you at least have mechanisms in place.
Mhm.
But for sure, in the last 4 years, I would say it's not surprising. When we came into the market in 2021, it's when, again, like tons of capital going into this market. We saw this sudden, it's almost like a hockey stick, right? In 21. Um, in some ways, that's why I got in because I knew a lot of those credits were not what they were claiming. And it's not too surprising that the Guardian article, there were a couple of them. Even the New Yorker got involved, right? They wrote a story about what was it, the great cash for hustle for cash or
Yeah,
something like that.
yeah,
Um, yeah, and John Oliver, just as soon as all this money started pouring in, then that's when you get investigative journalists getting interested. Everyone follows the money. There was greater scrutiny in the market. Um, and there was, of course, these exposés of things that for those of us who have been in the market a long time kind of knew existed, right? That these a large percentage of the offsets or the carbon credits that were in the market 4 or 5 years ago were not what they claimed. I think now, like you asked, like, where are we at today? Like, what has been that trajectory? Crash was not too surprising. Really unfortunate. I think it's easy to lose confidence. It's really hard to build it back up, right? So we're in
mhm.
that phase now of really needing to build confidence back in the market. And I do feel that there are things that are happening now that I have not seen in the 20 years I have watched this market. There are new mechanisms that are being put in place. So I would say like ratings agencies might be part of that ecosystem of trying to build a business model that sort of pulls in a different direction to provide some balance and some accountability over the market. Insurance companies have come in to help insure some of these risks. The ICVCM is almost like a quasi-regulatory body that has been developed, the Integrity Council for Voluntary Carbon Markets, that's sort of opining on quality as well. So I think some of this infrastructure is being built that can help shore up this loss of confidence. But then the question is, will the confidence come back? Like, will companies come back, invest, and feel like there's value, right? There's value to their brand. There's
Yeah.
value to taking action in this way. That I don't have a crystal ball. I
Well,
don't
I'm
know.
curious about that because there's a few on this call, a few corporate sustainability people, buyers of offsets. And one of my first questions to you that we didn't fully touch on is we talked about are offsets net good for the environment? And I think you made a fair case that the answer is probably yes. When you're a company, I want to dig into a little bit about what you think a company's role in offsets is and where it's very important or not. And I think just a couple data points, but um, over the last couple of days, Microsoft just announced a massive offtake agreement with some new, incredible, we'll call it an offset company that basically takes all this waste and shoves it deep underground. JP Morgan, maybe a year ago, announced, or 2 years ago probably, announced a $250 million series of purchases. When Frontier Climate launched a couple years ago, it was like Stripe initiative, and they did it in partnership with McKinsey, Meta, Alphabet, Shopify, and maybe I'm missing somebody. And they announced a guaranteed $1 billion into these offtake agreements over the next 10 years or so. So you have that magnitude of things, and in the article I read, was a TechCrunch article about the McKinsey about the Microsoft story from a couple days ago, they talked about how Microsoft, who actually does put their money where their mouth is and spends a lot of money on decarbonization, on clean energy for and renewable energy for these data centers they're building out, on vegetarian meal options on their campuses, on all those sustainability things, they really do take it seriously. Are saying we are building so many data centers and using so much energy that even if renewable energy grew 10x, it still can't keep up with our needs. So we need to, in order to hit our 2030 goals and all these goals we publicly set, offsets are really the only way to do it. There's another group of companies that say, eh, like we got emissions. Can I throw some money at the problem? Oh, I can buy offsets. What's the cheapest way to get away to say I'm carbon neutral or do something like that? Let me move on. I want you to talk a little bit about those two groups of companies. And if you think what one can learn from the other, whether that second group I described or just like, how do I just kind of do something cheap and move on? Maybe that's totally fine, and that's there's useful corporate goals there around branding, around saying you're carbon neutral. If there's things you don't love in that group, or if there's just things that they can be doing better.
Yeah, it's interesting because you've really painted a really nice picture of the bookends. I feel Microsoft, Google, Meta, um, they're unicorns, right? They're not. I don't think most companies can do what
No,
they can do. They are um, high profitability, generally lower footprint. Although I think AI and the need for those data
like increasing
centers
that fast, yeah,
are changing that. But financial services companies like JP Morgan, they are high profit, lower footprint generally, and they can do something different than most companies. I am most interested in the companies kind of in the middle, the companies that are not the I just want to check some box, right? I'm interested in there's a range of companies out there that don't get the headlines that are doing really good work, doing what they feel is responsible for a company, which is setting an internal cost of carbon for themselves as a company. And I think that's really healthy to do. Um, there are a few good examples of that. Set it at, I think it should be flexible, right? Because every company is in a different place. So you set an internal cost of carbon, reduce as much as you can. And then if you're able to do more, right? Because there's always going to be hard to make, very expensive emissions that you just
hmm
can't manage. I think
hmm
offsets in that case, they're a good option. I think that you can tell a good story if you really are careful about selecting those credits. You can make a reasonable claim about what you're doing. Um, to take your responsibility for your emissions.
yeah.
Um, I don't think you
What do
need to be a Microsoft spending, whatever, however many dollars per ton that they spend for very expensive engineered removals. I will say
Yeah,
we have nearly 1,000 ratings. Actually, I think we're going to surpass 1,000 next week, and we find high quality credits at lower prices.
yeah.
So it is
I
possible.
wanna I want to talk about that in a second. Because you and I did talk about that. I think you had some interesting points there. Before I touch on that, what do you think of the phrase or the target of the certification carbon neutral? Positive, negative, complicated, and how's it changing?
Complicated, complicated. Um, yeah, I don't have a strong view on that. I think that yeah, too complicated.
Well, why
To,
is it complicated? What's
um,
some people might say it's very simple. You got some emissions, you buy some offsets, 1 + 1 - 1 = 0, you're carbon neutral.
yeah, I wish it was that simple. And I like the idea that, you have an emission, you can buy a high quality credit that either avoids, reduces, or removes, right? And I think that's where it got complicated, where people started to say, like, the only way that you can claim, and I think SBTI has been involved in this sort of net zero or neutrality claim, um, is to remove rather than avoid or reduce. But we could have that discussion because I think there is a real question around the atmospheric math around this, right? So does carbon neutral mean if you emit something, then you have to remove something? Or can you avoid an emission instead of removing an emission in order to claim that neutrality? I think that's where it gets a
Yeah.
little bit, I don't know, where people don't agree, maybe.
As you might expect, I have a very strong opinion about this. I
Do
really don't like
you?
the phrase carbon neutral.
Oh, you
And
don't?
I'll tell you a story and I'll tell you my reasoning. I'm curious where you agree or disagree. Um, in 2022 or so, had a client, publicly traded company, and they had, before they worked with us, made a carbon neutral go forward commitment. They said, we're going to be a carbon neutral company forever. A year later, they switched from their old carbon accounting vendor to us, and we did their emissions, and they call me and they're like, all right, great, time to buy our offsets. We have a go forward carbon neutral commitment. I say, great, here's a few options. They go, oh, no, 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 no. Our budget is whatever it was, $70,000. And our emissions are whatever they were, 20,000 metric tons. Go find me offsets. All I have is $5.30 a ton, or whatever math that comes out to. Go find that. And I said, that's not the right way of doing this. You are forcing carbon neutrality at the expense of high quality credits. That is a problem because if you say my goal is carbon neutrality, then you are trying to reach that goal at the lowest cost possible because you're going to get that goal no matter what. As long as it's a like verified semi-credible offset, you'll be able to claim carbon neutrality. But that's actually not good for the planet and possibly bad for your brand too if more Guardian articles come out. What I advocated for them, and I lost that fight with them, but I published the book in November 2023 or something, where I had a whole chapter advocating for this, is down with carbon neutrality and up with something like a carbon equivalency cost. Meaning you set an internal carbon price, like you said, call it $10 a ton, call it $5 a ton, call it whatever you want. And that adds up to what your budget is to spend. So if you have 20,000 metric tons and your carbon cost is $5 a ton, you now need to go spend $100,000 on high quality credits. That might not get you to carbon neutrality because maybe you have to spend, we'll talk about this, $100 a ton or $40 a ton or $500 a ton or whatever on what you want to spend, but you will higher quality credits that you can be proud of. And that chain, those like that leg chain of carbon neutral claims are not going to hold you back from doing the high quality thing. That's why I really don't. I think carbon neutrality sounds lovely, nice goal, feels good. Fortunately, I think sustainability is in the like post marketing era, so we don't need to like. It's not all about branding stuff, but I think it there's a lot of negatives that come with that, and I would, whenever anyone asks me, share a very strong opinion that down with carbon neutrality, up with buying high quality offsets at an internal carbon price set, but it's less about the number and more about the quality of those credits.
It's an approach that I think SBTI had put forward, right? This money for ton, right? So where you look at your residual emissions and you have a price of carbon, and then you multiply the price of carbon times your residual emissions, and then you spend that on something that is truly worthwhile for the planet, right? And to help with this climate crisis that we're in.
Mhm.
So I think that's definitely valid, but let me challenge you on something.
Please.
Um, so I think that to be credible, one should set an internal cost of carbon that is reasonable, right? So I don't know if like $2 would be
Hmm.
reasonable, right? Because if you set it too low, then you're going to go out and you're going to end up not having that much money to spend, and
Hmm.
I don't know if that's responsible, right? There are various social costs of carbon out there.
Hmm.
I would say none of them are down at $5. Many of them are a bit higher. So maybe first of all, one needs to set like a high enough
Hmm.
um, internal cost of carbon.
Hmm.
If you do so, let's say you set it at $40 or $50 a ton. I
Hmm.
think some of the social costs of carbon tend to be around, $50 to $100. So if you're in that range, that's great. Um, if you set it in that range, I guess my challenge would be, I think you can find high quality at a lower cost in the market. And
Mm.
if that's the case, maybe, okay, would you advocate for this? Is my question for you. Let's say you set it at $50 a ton. You had 20, okay, I'm going to show if I could do math.
No public math,
Really?
yeah. Famously,
Public
no
math,
public math.
exactly. Okay, let's say you had 50,000 tons residual. What is that? $1 million? Wait,
Sure.
50. Should I do the math right?
Call it
Uh,
$1 million,
okay, a
whatever it
million
is.
dollars. Okay. Um, would you suggest then taking that $1 million and just spending it on, let's say you have durable CDR at $1,000 a ton, you could buy, what is that, 1,000? Oh no, more public
So,
math.
so you got 1,000
A
credits,
thousand
yeah.
credits? Or would you say, actually, at $20 a ton, I can get some really high quality, I don't know, super pollutant credits.
And you got 50,000.
And then you have 50,000. So would you suggest to them just maximize your spend? You might even do even more than your 20,000 residual emissions.
I think that's a very fair debate. And I think the way I would make that debate, assuming a level of quality, is spend $1 million, because that's your internal cost of carbon times whatever. And then whether you pick super fancy CDR or lower cost, whatever that second example is, that is partially a branding and storytelling conversation.
Hmm.
Meaning, if you're Google or Microsoft and your whole thing is investing in incredible engineering and future looking stuff, put money into things that are incredible engineering and future looking stuff. If you are if you're like, waste management company, then maybe investing in methane capture, landfill gas, or whatever is high quality is a really good use of your time. So I'd say actually the conversation is, in my mind, after a certain quality threshold, there you can bring in what story do you want to tell because it's relevant. Um, but as I would keep carbon neutral out of it, but I like your moniker there. There's a couple of really good questions here that I want to ask, and then we'll certainly
Yeah.
talk
But maybe
more.
let me just
Yeah,
say, just like wedge in one little point, which
yeah,
is if
yeah.
you set your internal cost of carbon high enough, you should not, I guess my point is, you should not have a problem um, compensating for your residual emissions at that price point. And
That can
so
be true
then,
because
yeah,
you could find your point is, and we'll touch on this. You can find higher quality than you would expect credits at lower
at
cost
lower
than one might
cost.
think. Not at $5, but not. It doesn't
Yeah.
have to be $150.
Yeah. Yeah. Because the whole
Yeah,
point of the carbon market is cost containment, right? Like you might as well, you can mitigate more with less, in a
yeah.
marketplace, right? It's ostensibly that's what should happen. So
Yeah. A couple good questions
thank
here,
you.
and then we'll jump back into it. But Terry asks, given the current debate about how impactful carbon offsetting is, has there been any talk of leveraging blockchain technology to validate carbon offsets? Fun fact, Adam Newman, famous for starting WeWork, where I am, and possibly defrauding investors, um, started a company after that called Flow Carbon, which was carbon offsets on the blockchain, raised a bunch of money, and then basically went into hiding, as far as I remember it. I know that experiment has been done. There's been some others. I think Toucan was like a carbon offsetting protocol on the blockchain. Um, but I'm not sure, kind of, Donna, have you looked at blockchain and carbon offsetting or anything to add there?
Yeah, and I mean not deeply, but I was just actually talking to JP Morgan made this announcement recently about a new sort of meta, it's not a meta registry, but a transaction platform using blockchain. I think it can be really useful in um, if it sort of has the right safeguards and infrastructure around it, right? That you can't just say blockchain, it's a very fancy word, and people like create a credible thing. You have to create all those bells and whistles around governance. How is it operating, etc. And I think I've seen both being developed, ones that
Mhm.
look like, yes, they can solve some of those problems with thoughtful design and some of that sort of infrastructure and governance around it. Others, you know, without that, who, as you say, come and go.
Yeah. Um, AJ asked a question, and AJ, he or she might need to explain what they mean. I'll let you know, Donna. But AJ asked, are the carbon cowboys, which is opaque trading, responsible for some of the current dynamics in carbon market buying? If so, what would you recommend to diminish their role? Do you know what carbon cowboy is?
Yeah,
I
yeah,
know.
no,
Okay, great.
it's an old
Teach
term.
me.
It's an old
Okay.
term. Um, but it's interesting because I think of them not so much as opaque trading, but the context in which I've heard carbon cowboys used are organizations that will go into, let's say, some country, Bangladesh, Papua New Guinea, so they'll show up in some country and work with these local communities who have never heard of carbon markets, no idea what they're getting them into, make them some promises, cut a deal, create
Hmm.
a carbon project, you know, generate the credits. They're trying to be profitable and not leave much for those communities who they've asked to, change their lifestyle or do something different. So I've heard it used in the context of, especially I would say, westernized organizations going into the global south and setting up these
Hmm.
carbon projects, and not really in a fair and equitable way for communities.
Hmm.
So is that happening? Absolutely. Like I have seen so much of that happen in the market. I think there's also, in the context of the question that's being asked, this is a very opaque market. And I think there's a lot of arbitrage that happens. I think we need to build more transparency into this market if it's ever going to mature. And
Yeah.
again, like I see some of that being built, which is good. I see a lot of efforts at greater transparency. Um, this is still a very nascent market, right? It still has a long way to mature, and transparency is definitely part of that.
Yeah.
So hopefully it flushes out some of both the carbon cowboys as I see them, these folks who are taking advantage of communities, as well as maybe the opaque trading that's happening.
Yeah. Perfect. And for those who are wondering, AJ is a she. So thanks, AJ. Good question. Um, Perfect. It feels like a good opportunity to transition into Calyx itself. Can you walk through what it means to rate a credit? Like, what is the process like?
Yeah, so we have rated so many credits.
Nearly a
What
thousand. Nearly a
nearly a
thousand.
thousand. Yeah. Well, there are millions of credits, but maybe, 1,000 different instances
Projects.
of them. So what we're looking at, we look at three different things when we rate a credit. So when we think of credit quality, we look on three dimensions. The first is what we call greenhouse gas integrity. And the easiest way to think about that is a ton a ton. Like each credit ostensibly is either reducing or avoiding a ton of CO2 or removing a ton of CO2 out of the
Hmm.
atmosphere. So is a ton a ton? And surprisingly, mostly it's not. But increasingly, these are improving. I do feel like we do find some really solid claims. Um, but it's important, especially if you're using it to offset your own emissions, you want to make a really solid claim. So is
Hmm.
a ton of ton greenhouse gas integrity. The second aspect we look at is sustainable development impact. So these credits often come with these wonderful, we call them co-benefits sometimes, but they reduce poverty, they conserve biodiversity, they might provide jobs, employment. They can do a number of other positive things that are unrelated to climate. But they make these claims and they certify them. And oftentimes we work with companies who might also have biodiversity targets or health. They want to improve health impacts or
Hmm.
water resources. So you can sometimes get both of those things in a certified credit. So that's the second thing. And then finally, we look at environmental and social risk. So you don't want to be harming communities and people and biodiversity at the same time that you're improving the atmospheric balance.
Hmm.
So for example, if you're replacing a native grassland with a monoculture eucalyptus plantation, that's bad for biodiversity. You might have more carbon on the land, which is great, but that's harming
Hmm.
our planet in other ways. So we want
Hmm.
to ensure that there's no harm done. So we look at that third aspect as well.
Yeah. You talk a lot about co-benefits. It always confused me a little bit why it's important to consider co-benefits. If the goal is remove carbon, why should a project be more or less rewarded if it removes the same amount of carbon as another project and it also has co-benefits? Like, why not judge it purely on the merit of its core goal, which is removing carbon or avoiding carbon or whatever?
That's such a great question. And I'd be curious your view as well. Do you feel like a carbon credit should just be about the climate, or also, is there value in adding stacking other values?
Views here are not as strong as they have been on some other topics, so it was more of a genuine question than a lead up to let me rant for a little bit. I would err on the side of like, I care that it's removing or mitigating or avoiding or whatever carbon above all, like far above all else. I could be convinced that all things being equal, like it's nice if it also employs people or whatever helps like helps people. I think it's. I'm not sure. Not a strong opinion here. A genuine question about like why it should matter. I mean, clearly it does. It's one of your three groupings.
Yeah, so I would say that it partly depends on the use of the credit itself, right? So what are you using the credit for? If you're using it primarily to make a claim about offsetting your own emissions, about compensating for your own emissions, um, even though you don't like carbon neutral and net zero, let's say companies are making that claim, you really want to make sure that that greenhouse gas integrity, that the ton for ton is really
Hmm.
solid, right? Then that's the
Yeah,
number one reason.
number one.
So, like I said, companies sometimes want to either tell a story or they have other sustainability goals unrelated to climate, right? So they might have goals related to, we also, as a company, want to ensure we're preserving water resources. We're benefiting communities, maybe in places where we operate, right? So you could see a company that has operations around the world, they might want to benefit those communities and provide some story around the positive co-benefits. I will say one thing, the Paris Agreement that you're familiar with, I assume,
Hmm.
they actually call the trading mechanism, the Article 6 mechanism, was called the Sustainable Development Mechanism, interestingly. And why is that? It's partly this idea that who has been responsible for emissions over time? It's mostly the big industrialized countries like the United States, Australia, Europe. Who's going to be most affected by climate change? It's global south.
Yeah.
It's countries that do not cause this problem.
Yeah.
And so in that, so I used to be a climate change negotiator. I don't know if you know that. I represented the US. I was at the State Department. Um, and when you're in this situation where you're in this negotiation with 192 countries, and it is tough, I will say, it is a bruising experience representing the United States. You can imagine we are not seen as the most responsible country on the
Yeah.
planet.
Yeah.
Um, People yell and scream at you. Um, and especially it is heartbreaking, right? These countries in the global south, whether you are a island that's going to have sea level rise and your very existence is at risk, whether you're in a very poor country that you're just trying to, you can't even feed your people, right? Much less now you have, um, water problems because of drought or extreme temperatures. Like they feel it way more than we do
Yeah.
in the United
Because
States.
of the
So
access of the United States, China, India, mostly the
yeah,
US, a
exactly.
little bit of the EU. Yeah.
Yeah,
They're
so
getting
it's
hurt.
sort of
Yeah.
like exactly. I love the way you put it. Our excesses are causing this problem.
Yeah.
And so it's almost like a climate equity or climate justice issue that's kind of wrapped around
Hmm.
the
Hmm.
thinking around these markets. At least that was the uh, the context in which the Paris Agreement crediting mechanism was,
Yeah.
developed. So
It's
I just
interesting.
think it's worth thinking about.
Yeah.
Like, is there an additional responsibility for us? And the wonderful thing I will say about the voluntary carbon market is it is a mechanism for companies in the global north to help support some of those, to help countries. communities in the global south to overcome climate change, but also to provide jobs, employment, development assistance.
Yeah, that's a fair point. Um, my next question is about, um, you've mentioned a few times, and I want to get to this. Offsets they don't have to be $150 a ton to be high quality. So I want you to share a few examples of uh, projects or types of offsets that are at a lower cost that you guys rank as high quality. Tied to that, my friend Asheen, who introduced us actually for this conversation, just asked a question: do you personally, or on behalf of Calyx, purchase carbon offsets for your own air travel or other life activities? So maybe if the answer is yes, you can talk about what kinds of credits you guys buy. And if the answer is no, I will be even more interested.
So we have purchased credits, and of course we purchased our like AAA rated credits, so the best credits that we thought were in the market um, at the time. And I will say the ones that we purchased relate to this issue that you just asked me, which is where can you find kind of the lower cost? We're a startup.
Mhm,
We are not okay. Confessions of a climate change co-founder. We're a startup, right? We've got to be scrappy. We cannot, like Bill Gates spends what, $500 on carbon removals to offset his flight. We
yeah,
cannot afford that as a startup. So we um we have the benefit of knowing where to find the high quality, lower cost credits. And some of them right now, so I will say in today's market, some of the best credits are around super pollutants. And super pollutants are those gases that have high global warming potential. So this is methane, ozone
mhm,
depleting substances. And the reason why these are higher quality is because in some ways they're fit for purpose for the carbon market. They're easy to measure. If you're measuring the destruction of ozone of a chemical, you're basically taking a container, putting it on a scale, measuring the weight of that, destroying the gas, and it's done. Easy to measure, pretty easy baseline to set, no non-permanence risk, simple, right? In some ways, very easy, good fit for the carbon markets. Think about what everyone wants to buy, which is nature-based credits. Now, don't get me wrong, nature's going to have all those wonderful co-benefits.
mhm,
Nature, we absolutely need to protect nature to have a safe planet.
mhm,
Super hard to measure. That's why it's beautiful. That's why everyone loves nature, because it's not totally uniform. It's got beautiful aesthetics, but it's very hard to measure changes in
mhm,
biomass. And it's hard to know, in a very dynamic landscape, what would have happened in absence of the
mhm,
project. Hard to set a
mhm.
baseline.
Yeah, maybe if everyone just left it alone, some forests would grow and we'd all be fine. Everyone wants to put their grubby little human hands on on these areas, and who knows what'll
Yeah,
happen.
I mean, that's the other thing,
Uh,
non-permanence risk, right? Like some point we might want to cut those forests down to
yeah,
build something, or
yeah,
maybe there's fire because of climate change because it's getting warmer and drier.
yeah,
And so yeah, a little bit harder, right? And I think
yeah,
those credit types I think are improving over time, but I will say right now, the highest quality are in some of those what I call the non-charismatic, the ugly duckling credits that don't make beautiful photos for a sustainability brochure, but are really good
yeah.
in
I
terms of
always, for what it's worth, the methane capture one, like landfill gas, I actually always really loved. Sorry, methane capture being different. There was a series of projects. I think Tradewater was the developer that was running a bunch of them, at least the ones that I knew, that would cap oil and gas wells. Because apparently, when you go drill for oil and you try all these different sites, you drill for oil, maybe find some, but not enough. And there's no law that's either. There's no law in certain states that says you have to cap this hole that you made in the ground, and so methane continues to come out of it. Or companies go bankrupt because it's so expensive to drill that when they drill and they don't find enough to sell, the company goes bankrupt, and then literally nobody can cap that oil and gas well, which is a huge problem. So in my mind, those are always the projects that like they were simple and they made perfect sense, right? You have a hole in the ground, it's leaking a bunch of methane. Everybody's struggling and no one's going to do anything about it. Give me some money. I'll go do something about it. It'll stop the methane from coming out. Easy. Like simple is a good thing, whereas some other projects were like, we're going to go to this area, we're going to train the local tribe to manage the forest. Over 30 years, we'll suck out this much air, but only if the paper company moves to Texas, and then possibly make like complicated was just almost always too complicated. These like simple, there's a hole, pay me to plug the hole, always made a ton of sense for me.
Yeah. I've learned a lot about oil wells because it is a new project type and it's one that we cover. Um, and especially I think when you're talking about these projects, many of them are orphaned, right? There's no solvent
Hmm.
owner. There's no one who's truly responsible for plugging that
Hmm.
well. It's just going to keep leaking.
Yeah.
So,
If you were a buyer company and your job was to go buy 20,000 tons of something because you want to be carbon neutral or whatever, what criteria would you put in, or like how would you begin to go make your decision on what to buy? And you guys like, is would you only buy Calyx AAA period, and anything below that you would never even look at? Would you only buy, how would you think about price? How would you think about type of credit? Like, how would you go about the buying process?
yeah. I mean, first of all, I'd look at my budget. Like, I'm just realistic, and that's something that we had to do at Calyx. I'm sympathetic to companies who are not the unicorns, who actually have to work with a budget. Um, and then after that, I'm a fan of the Oxford principles. Are you familiar? I don't know if you're familiar. Your
No, tell me
folks.
about it.
Um, so it's really it's a really nice approach, I think, that is consistent with the science of what we need today. So the Oxford principles have this really beautiful graph where they suggest, okay, today, 2025, we really need to avoid emissions. We need to like the tap is just gushing, right? We are gushing emissions into the atmosphere. So we've got to like stem that tap first. But it also recognizes that eventually we're going to have to remove. We're not moving fast enough. Like we will need to remove CO2 from the atmosphere, and making early investments, like that's really good too. And so, I don't get me wrong, I love that Microsoft and others are spending so much money focusing on some of these engineered removals because we're going to need that technology. So it's like paying down the green premium, as Bill Gates would say, for technology we would absolutely need at a lower cost mid-century to like suck stuff out of it. So it sort of suggests um thinking about what's the right balance for today. So today, maybe today it's mostly avoidance, but we also have to protect nature. So maybe also doing something on the nature side, just even though they might be riskier, and then a little bit of removals to help pay down that pricing that we're going to need. And, I think within that, um, it's science based, which is great. It sort of looks at what do we need today, what will we need in the future, like what can we help to create that
Hmm.
future we need. It recognizes that nature is really important, absolutely have to preserve and protect and restore nature, but in different amounts. And over time, they have this picture that's lovely because over time you reduce your purchase of avoidance. Hopefully we get to the point where emissions are dropping and you're going to
Hmm.
increase the amount of removals. um,
Yeah.
I think that's the right way to think about it. I mean, that's just me personally.
Yeah.
Calyx doesn't take a view on this. That's just I'm a,
That's if Donna was in charge. Yeah, that's different. Um, in the last couple minutes here, and if folks have more questions, please chime in. But you guys are now about 4 years old.
Hmm.
I'm curious. The first 4 years were in a very different political situation, a very different, just corporate sustainability budgets situation than the next 4 years are going to be. What are you guys really focused on over the next 4 years? What are you trying to get better at? What are you trying to make the market get better at? What are you guys like talk as a startup founder? I think people are really curious. What are you guys focused on for your next 4 years?
Yeah. First of all, I'm sympathetic. We're in a different place, and so for sustainability officers for companies, it's a tough time. I was at this conference and um, they asked all the sustainability officers, "What's the number one concern of your CEO?" And for every single one, it's tariffs, 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 tariffs. And that just sort of squeezes, I think, the sustainability budget in some ways for lots of folks. So we're in a different place. So for us, though, thanks for asking. As a company, we just remain focused on our mission. Like that has not changed over the 4 years. I mean, despite the boom and bust of the market, for me, as a founder, the most important thing is that we're playing a responsible role in the market. We're helping not just Calyx, but the market as a whole rebuild confidence. Um, and that we stay focused on, trying to help companies make choices that are going to be, planet positive. And so we just try to serve our customers the best we can. I will say, as sustainability officers sort of are thinking different today than they might have been 4 years ago, that might change the types of services that we provide. But ultimately, what we can do to support companies to make choices, good choices. That's what we do. Stay focused on that.
There we go.
Yeah.
I like it. Well, Donna, I really appreciate you joining. This has been awesome. For folks who want to reach out to Donna, I just dropped her LinkedIn and the Calyx Global website into the chat. Um, I'm also going to let you know that we do this webinar every single Thursday at 2 p.m. Eastern Time. Next week, I'm interviewing Brendan Maloney, who's the head of sustainability at DocuSign. In a couple weeks, we're talking to Brianna Hardy, who's a sustainability lead at Bureau Veritas, which is one of the largest assurance companies in the world. So if you're thinking about getting assurance on your carbon emissions or your removal credits, that'll be a really good conversation. We have many others in between, so please follow that. But Donna, this has been awesome. I learned a lot. I appreciate the really good debate on a very important subject. And I think we all very grateful for your time. So thank you for joining us.
No, thanks for the invitation.
Yeah, absolutely. All right, everybody. We'll see you soon. Follow Donna, reach out if you need to learn more, and I hope to see you next week. Bye, folks.